for coming. And so this is the Zeitgeist panel. And I had to look up what Zeitgeist is, even though I am German originally. So it's the spirit of the times. And what we here in California say, it's just, what's up? And it's nice and broad, but as Mark pointed out, for me, it's really interesting to see. And what I hear is you have sort of the two camps, one that kind of open up the newspaper and see all the sad things that are going on around the world. And so there's the disillusionment on that side. And on the other side, you talk to many folks here in the Valley, and it's like they've drunk the Kool-Aid, and it's only exponentially up from here. And so we have a group of 4 panelists up here that will touch on what their views are, where in the spectrum do they fall. Before starting the roundtable discussion, I'd like to just reach out and talk about what Sam Altman likes to ask groups, which is something that we can all think about. What happens when technology drives the costs of various things to zero? And who will be the winners and the losers in a world where cost is zero? And specifically, what he's talking about is what happens when the marginal cost of information goes to zero, thanks to AI? What happens when the cost of computing goes to zero, thanks to quantum computers? What happens when the marginal cost of labor goes to zero because of robotics? The cost of energy because of fusion, and then the cost of education because of online courses. And so it's so interesting kind of to think about, is yours on? It's mine. Oh,
I could hear it, but there's a buzz.
And what happens when the cost of microphones goes down to zero? It's it's really interesting kind of think about these what ifs. But with that, I have, before this panel, we actually talked with one another. And so there's some specific topics on the Zeitgeist that each of us wants to comment on. And what we'll do is, let's do a couple of rounds here, maybe just do 2 or 3 minutes each on sort of who you are. Maybe you can introduce yourself and talk about what is your favorite topic that you kind of, that's top of mind for you. With that, maybe I'll start here on my far left, which is Ken Goldman. And Ken Goldman is the former president of Hillspire, which is Eric Schmidt's family office. So we're very fortunate to have Ken join us here. So Ken, maybe you could kick it off, and we'll just go down the row here. If you can maybe keep it to 3 minutes or so, just what's top of mind for you?
You want to give me that or not? Yeah. The thing has gone to zero. Welcome. Actually, before I say anything, your favorite topic is normally sports because I'm involved with the Golden State Warriors, but we're not in the finals, so it's not quite the favorite topic. Although there is a game tonight. I've had a long. Let me see my time here, so we don't go more than 2 minutes or 3 minutes. Long career as a CFO, including Yahoo, Fortinet, Siebel, At Home, Sybase. Was involved in taking a few of those companies public. I then ran after we left Yahoo. Actually seen Marissa a lot. I'm trying to help her in her little company as well, and saw her last night. And then went to work for Eric Schmidt on his family office for 5 years called Hillspire. It's a very broad family office, including 2 foundations. We had all the finance, HR, legal, investment aspects, all the personal properties, toys, planes, yachts, all that good stuff. Scientific projects. So it was very, very broad. And I did that until a couple of years ago. Now I'm on a number of public, private, nonprofit boards. Public, I'm on Fortinet, Ring Central. Just got off GoPro and joined C3 a couple weeks ago. A couple other companies I'm involved in may or may not go public soon. So it's never boring. In terms of what I do, also I do attend, as Heinz said, a number of family office conferences where I speak or talk to a group or listen. I'm in a number of probably too many venture private equity funds, some real estate funds. So I see a lot. I got a lot of introductions to firms that I knew myself through the years. I've been investing. Actually, I was in the Kleiner Perkins first fund back, not the first one, sixth fund back in '96. I think they're up to 22 or 23 now. Actually, benchmark has the best way when they got to 10. The next one they just recounted and started at 1 again. So it's interesting. But I do see a lot of activities in terms of funds, private equity, and venture. Particularly, I do a few one-off deals a year where I see opportunities where people come to me to invest, and I look at those as well. And a lot of what I do, frankly, is trust in people. And I'll give one interesting anecdote, then I'll give the microphone away. It turns out I meet a lot of people through different means. And the only reason I'm gonna bring this up, you'll see in a second, I happened to meet this guy, Paige Craig. You probably none of you know, one person knows him. He runs Outlander VC. It's a firm most people hadn't heard of. I met him at a Milken conference. We happened to be on the bus together. And I liked his story. He's a very strong military background. And so I just liked his story. I like the fact that he's in the East Coast. He does at least at the time, underrepresented, or underknown companies. And it turns out he's a very large investor in scale. So I see a couple of people back there know him. So it's just amazing if you network and get out and about. Sometimes connections can mean a lot. And so the only reason I bring that up is I am in a number of organizations like Milken, like Hoover, locally here, Stanford Economic Policy. My time's up. Okay. Oh, 361 too. I didn't give you an anniversary yet. Okay, it's 361 too. Marcus reminded me. Yes.
Before we move on.
I was about to move on because my time was up.
No.
I'll give you the extra time.
No. Can you talk, you mentioned a moment ago.
Yes.
What are your thoughts on geopolitics and
Oh,
how
yeah,
they impact
I did.
your investing? Have you stopped
So
investing?
does this
Have
count
you
against my 3
accelerated it?
minutes? No. Okay.
Yeah.
Okay. So now I was mentioning this, one of the benefits you have is patent recognition of been around a long time. And I certainly, you can tell I've been around a long time. And so I was talking to Anthony from CNBC this morning, and we had a phone call because I know him and talking about different things. And he's remarking that I happen to watch. The only thing I watch is basically live news, sports, the weather, whatever. And I've seen where I was talking. He said, "Boy, it surprised him the market was up today because we still have the war." And I said, "Anthony, I think in all the time I've been watching it, geopolitics almost never impacts the market long term, unless I remember a long time ago where you had a shutdown of oil. So yes, if you have a shutdown of oil through all the Middle East, that's obviously draconian. But when you have a very isolated situation, the two I can think of obviously is Ukraine and Russia, and now Iran versus Israel and so forth. They're very isolated. And so when they're very isolated, there's always a bunch of noise, but then it goes away because unless it affects financials, that's why tariffs is so much more concerning, because that affects financials and earnings and so forth. The market does move on that. But in geopolitics, once the shock and awe, to use an old expression, goes away, you find out it's just not important in terms of the average investor. So anyway, that was a discussion we had on geopolitics. I've been through it so many times, and again, there's always a little hiccup initially, but as things settle down, and unless it's going to affect earnings of companies and growth of companies and revenues, I hate to say this because it sounds bad, but from an investing point of view anyway, it's a blip in the market.
Fascinating. That is a little surprising that markets are running.
Yeah, I mean, market was down Friday because frankly, it was down Friday as much because A, was a surprise. B is the real issue is, same with Ukraine and Russia, does it expand beyond the two folks? And then it's a different situation. But if it's isolated and people see that is not, an epidemic, if you will, then generally the market recovers.
Thank you. Maybe on the next round, we can fill in a little bit there. Thank you.
Yeah, you get next.
You
Go
want-
down this way.
You can use that mic right in front
Oh,
of you.
okay. Sorry.
You can turn the mic on. And put it
What are we doing?
if you need it.
So Yi Wen will talk to us next, and Yuan, while we're on the topic of geopolitics and international investing, I think that's something that you do quite a bit. If in the Zeitgeist discussion, if you can kind of increase our borders and tell us what are the thoughts beyond Silicon Valley and how important is sort of international thinking here? And, yeah, talk a little bit about more broadly.
So I have 3 + 2 minutes or 3 minutes? Okay, I'll take 3 minutes first. So I'll introduce myself. I'll talk about the things that I like to talk about, and then geopolitical international investing in 3 minutes. Okay, let's go. First, I think I pick a very hot seat between Ken and Edward. It's very difficult to follow. Whenever I introduce myself, I used to start with I was made in China, and my hometown is Wuhan. About 6 years ago, that was very normal. Now it's double controversial, but that's the truth. So I'm here. My title is Head of Alternative and Venture at Bayview Development Group. We're a single family office based in Los Altos, which is 10 minutes away from here. We have office there in San Jose, in Beijing, and in Tokyo. So we're mostly make wealth in real estate. My role is to use the wealth made in real estate and diversify that into venture and private equity. So on to the next topic. What do I like to talk about? So I'll talk about 3 things.
Could we maybe keep it to 1 and then we'll come
2,
back?
okay.
Give
the
it
last-
2. You got 2. Right. You got 2.
Thank you for the support. First is not so serious, and you know that. I love music, and so is Edward. I love to talk about jazz. I sing jazz on the side, other than investing. And how do I tie that back to investing? To your question, what happens to the world if AI can solve all the problems? So the question I ask myself as an investor and as a fellow human being always is, if AI can do everything, what do we love to do? And my answer to that question is creativity. Sorry, sing? Sing, yes. Apparently there are music apps that can sing as well. But the AI cannot give you is the experience that human can relate to. And also I think women's intuition is also very difficult to replace. We have to put it there as, you know, the women representative here. The second thing I want to talk about is, you know, one of my favorite investment theme, which is maybe a little bit out of line here, is blockchain and crypto, decentralized AI, you know, in that realm of things. I've been investing in that space for 10 years, seeing a lot of cycle up and down on blockchain and crypto. We can go into that later in details, but I think now we're at a very new era of blockchain crypto with the 2 Act, Clarity Act and Genius Act, being in place that to give so much regulatory clarity, especially in the US for the space. Stablecoin, payment, adoption of blockchain. I think there's a lot of things to uncover in that space. Then onto the third topic, I'm still on time, which is global and international. So as I mentioned, I was, you know, born and raised in China. I think now in Silicon Valley for 2 years, before that I was in Los Angeles, I really do believe that Silicon Valley is unbeatable in this AI race. But if there is another place that I would look, or, you know, investor would look that can compete with AI here, I would say it's China. And China, there are several things different. One is it's always very heavy on government. There are not that many growth in China right now, other than e-commerce, being an influencer, or doing an AI startup. And when you do an AI startup, such as DeepSeek, is already getting government support. One area in China that I'm particularly excited about is robotic. And, you know, we talk about this with science. For example, Unitree is in terms of price, is 90,000 humanoid compared to Figure AI here, which is 250,000. And they can basically do very similar things. So I think that's very exciting. With that, I hand over to Ed.
And just one comment on what Yuan was saying. It's what I find important for all us investors is to take a look at not just the perspectives of what comes out in the press here in Silicon Valley or here in the United States, opening up newspapers from Asia, from China, and opening your eyes on what's going on is pretty important. Just last week, there was a really great article too in The Economist on low altitude technologies, which is basically automation and robots that fly. So it's drone technologies, air taxis, and check it out. It's The Economist article last week. It's amazing how far, not just from a technology perspective, but also from a regulatory perspective, where the government is giving the go-ahead, the green light to many of these drone delivery companies and air taxis to go ahead and try their products. So I think I agree. Kind of opening up your eyes on what's going on beyond our borders is so important. We're very fortunate to have Ed here, co-founder of Oracle. And Ed, I'd love to get your perspective on the Zeitgeist today. And maybe if you could also, as we were talking about a little bit earlier, say a little bit, what is different in starting a company in the 1970s versus in the 2020s?
Thank you. I'm Ed Oates. I started Oracle in '77 along with Larry and Bob, and I left Oracle in '96 when Bob Meyer passed away. That was kind of my wake-up moment. And I've been doing music, helping startups get organized, not necessarily through technology. I'm too old to hire a 12-year-old to do technology. Playing music, and then working for nonprofits as boards at San Jose State in particular, alma mater, and the San Francisco Zoo for science education, especially kind of informal science education. So support your public science education places like zoos, exploratory, and those kinds of places. Kind of question: what's different? What was the atmosphere like in the mid to late '70s for startups? If you're doing a hardware startup, it's a lot like it is now. There are venture people involved who, fund Intel and things like that. Software was effectively, there was no software industry because IBM used to give away software with their computers, and there was no particular intellectual property protection. You could build all the software and somebody could just copy it. And that was a big lawsuit between Borland and Lotus about the way interfaces looked, and that helped settle the issue that. And Congress finally stepped up and they passed the Copyright Act. You could copyright look and feel, you could copyright algorithms, you could copyright your software, but you could patent those things. And you could always copyright the individual instance of code. So it's particular code you could copyright, but somebody else had to write the same function with different instructions, and you lost it. So the only thing that the advantage that companies like Apple and Oracle and Microsoft had, we had enough of a lead in building our products that the barrier of entry was years, not months. So I think the change in the intellectual property environment enabled the software industry as you know it today. So you can most software companies have armies of lawyers doing intellectual property stuff, patent everything they can think of and suing anybody who gets in their way. So that's a huge change, and it's enabled that entire industry. And almost all of what we see as movers and shakers is software enabled by hardware, like the AI hardware that NVIDIA and others have done. I think that, and I really like Sam Altman's quotes of what happens if basically information is free and the incremental cost of getting information is free. And we used to ask the same kinds of questions probably in the early 1900s. Of what happens if the cost of electric motors is free? And basically fractional electronic motors, like what exists in old mechanical watches, which have batteries. And basically it enables robotics to have, really inexpensive AC DC motors to do things, now electric cars. So fractional horsepower and then high torque motors have changed the world, continue to change the world. The next question is, what happens if computing hardware was effectively free? And now you can buy a box of chips that have processors essentially for nothing. So you can put processors in your refrigerator, you can put processors in everything you can think of in cars. These things are $1,000, whatever, and a bunch of processors, and probably 500,000 patents there inside your phone. And what does intellectual property affects that? So that both of those changes dramatically affected society and the way we operate. AI is going to do the same thing. What happens when AI gets more sophisticated than it is now, and I look at about 5 years, and my business was right software coding. And what happens with coding is effectively you just describe something you want to have done in a natural language, like English or Chinese or whatever, and AI will be able to translate between those languages in an unambiguous way, so you can be careful with your language. And AI just builds it for you. And I just was looking this morning, just out of curiosity, supposing I want to build an iOS app. There's about a half a dozen at least really inexpensive software programs that are based on AI that I can describe what I want. And whether it's drawing me a picture or they'll write code, it'll write an AI thing, and it's more powerful than drag and drop. So
May I ask you a question? May I ask you a question along those lines? So you're saying AI is going to have a big impact on the software industry, Oracle, database industry. Do you think if we have, a lot of us have kids here going to college and looking at careers, do you think it's going to increase or decrease the number of software engineers that will be needed in the future?
I think we'll decrease the number. The advice that I give, like I said, San Jose State Tower Foundation, I give a lot of talks to incoming freshmen to a program called Spartup. Spartans are the things that's a Spartup thing. I talk to juniors and seniors about what should they do in their college careers. And the most important thing, advice I always give, is learn how to learn and remain flexible and broaden your educational horizons. I've seen when I was going to school, it's a lot more general than it, but a lot of you see kids major in engineering, and that's all they do is engineering. They don't know anything about literature or art or how to write or anything like that. They just they focus because somebody told them that it's a job in engineering forever, and there may be. But if that job goes away through automation, through AI, just change it. Imagine if you were a radio engineer in the 50s and 60s for military purposes. That's kind of useless now. The 3 guys who know how to do that have jobs. The rest of them don't. And so those engineers who didn't learn how to learn so they could adapt their intelligence to something else had a real tough time. So it's important to broaden one's horizons. That's one of the bits of advice that I give to every college student, every kid that's asking, what should I do? Should I learn how to code? Well, yeah, you should. That's probably a good idea, but it probably won't be your career. It's probably going to change.
Would you mind giving Ken
Yeah. I've had a long time telling everyone, and I looked at my career, you go with the action. A very simple way of just explaining what you did. By the way, congrats on Oracle stock too. So it's all-time high. Yeah, well, so we always wish we had more of the winners and less of the losers. But no, I've always said go where the action is. And I remember coming out here, and by the way, the action here is still in Silicon Valley. I remember starting in semiconductors, and I went database software, went internet application software, network security. And so clearly AI, I think I've always said, figure out a great location and then figure out how to adapt and be flexible, as you said. And so I think that is ever more present today. I think the only thing I would say relative to, if you're an expert in anything, you'll be fine. So I think in software, and same by the way, in financial analysts, and I have, kids doing that. If you're not at the top of the heap, so to speak, you will be challenged. In software, if you're the creative side and you're the genius side, you will find jobs anywhere. I just saw a note where some of the hedge funds are looking for some of these guys and paying 100 million in a pop to find these top people. But if you're not that top group, that's where it gets challenged.
Yeah, there's an interesting debate that goes on. If you have a group, a company of software engineers, and some of them are mediocre performers and others are excellent performers. Some folks will argue if you give AI to all of the folks, it will sort of level the playing field. And Eric Schmidt and others would disagree. They say, no, it won't. The folks that, as Ken was saying, the ones that are the best in the company, when they start using these tools, they're going to get even further ahead. So it's going to cause more of a gap, but I don't know.
Just quick 3 things, because I think it's a very important question. I think to the future of work, my take on is 3 things. One is if AI can do everything, then the more important question is not to ask what, but why and how. And second, if AI has answer to everything, then the most important skill is to how to ask a question. And the third is, there are less software engineer needed, but I'm sure there are new types of jobs created. Like the whole Excel technology created the Wall Street. We just don't know what that is yet.
Just a comment to respond, because you're absolutely right. If you go into any organization, when Oracle started,
Okay, that's.
when Oracle started, one of our founding principles was to only hire the best. We don't want any journeyman programmers. We only want what we call super programmers. And Larry and I talked about a lot. You have super programmers who do 10 times the work of an average programmer. And most companies, they look at the spell shaped curve. So we'll have some people in the middle, some people maybe on the left side of the curve. But those people do negative work. And negative work means that the super programmer is going to make up for it. So why would you have anybody on the left 2/3 of that chart at all? And I think with the advent of AI, the people who, as you say, the experts, people who sit on the top third are probably do just fine, because there'll be different roles for them to play, even just the creation of AI, enhancing that model. But it's going to change the numbers of people in the journeyman area, and what are they going to do? What's the future of work for the average person in the street?
Thanks, Ed.
This guy just talked through it.
Oh, wait a second, we have one more
I'm
person here on the panel. Interrupt, you'll feel left out, but.
You guys watch the, with Shaq and, Kenny Smith. So there's a great one where Shaq gets totally overlooked and he gets pissed and he's like, it's not supposed to go 1, 2 back to 1. It's supposed to go 1, 2, 3. So the most loquacious panel I've ever been. You done? Are you done? I think we're going to check out. I don't know here. What's Oh, institution. So my background is I'm usually the old guy on the panel, but this one I've got 2 guys who beat me, which is kind of nice. I describe my background as operator, investor, allocator. I've been in 3 technology startups, 2 sold to public companies. There was a spectacular failure. And then I've been a VC in 4 funds and helped manage over $2.5 billion of capital, going way back to the NASDAQ bubble bursting. So a lot of lessons learned. But I think I'm here because I represent institutional capital. I am the chairman of the investment committee for the San Jose Pension Fund, which I've done for 9 years. It's a $9 billion plan, and we rebuilt the venture portfolio about 6 years ago. I also helped set up a small family office for a friend whose board I was on. We sold his business 3 years ago now for 9 figures. He bootstrapped it. That's the way to go. Don't raise capital. So he and his co-founder kept all the money. And we have a little captive venture studio. I am very concerned about venture capital as an asset class, which is a weird thing to say since I've been in venture. Don't think the returns have been there for institutional investors. Smaller funds have been outperforming the mega funds, which everyone wants to be in because they're brand. But the tricky thing is I'm long innovation. I grew up in the internet 1.0 era, and I see at least 5 or 6 themes right now that are more powerful or as powerful. Everyone knows AI, autonomy. I backed a robotics company 3 years ago, which we sold for just under $1 billion. And that's going to be a small outcome in the world. I mean, we were early, but we're going to see decacorns. Computational biology is just another revolutionary space. I think Zuckerberg will get the last laugh on AR, VR. Everyone was making fun of some of those initial investments and the name change to Meta. And then, did anyone think about space tech 15 years ago, 10 years ago? Emerging $1 trillion economy. So you got to figure out how to play innovation. I'm not sure venture models large enough garbage in there that it makes it a little bit trickier, but still doable.
You
have 2 more minutes.
See, that's why we took all your time. I know how to be succinct.
One thing, Anna, you and I talked about before the panel was the different long-term visions that an institution can have versus a family office. Can you maybe talk a little bit about, do you see there a difference? And if so, what does that tell you about the investing behavior?
Family offices, everyone knows this because I'm sure there are a lot of family offices here. There's the old saying, when you met a family office, you met one family office, right? Our family office is heavily operational. My principal doesn't want to bet on other people. He made a lot of money betting on himself. We do invest in startups. We do invest in funds. That's only because of me. His preference is to build new companies, which is why we have the venture studio. The thing I do like about families is they can be nimble. The thing I like about our institution in San Jose, and not all pensions are well run. I'll brag because I don't get paid to be a trustee, so I should get something out of it. We were the second worst pension plan in America when I took over the IC. And 3 years later, we were number 2, and we stayed in the top decile for 8 years. So it's been a dramatic turnaround. It's all been because of, I'd like to tell you that we're geniuses. I've met very few genius investors. It's mostly process. And so a lot of really good process was put in place. And that's what the better institutions have, great processes. And I could talk on and on about processes, but I won't. You can get me later at a break. And families are nimble. I mean, if you could combine the two, each family is entitled to have its own time horizon. I mean, I tell people whether you're at $500,000 and you're working with a Schwab money manager, or you have $150 billion, you got to figure out what your horizon is and what your risk profile is. And once you've done that, the rest is just shading things in. So if you're 500,000, it's 5 colors. It's ETFs basically. You've got 100 billion. You got 7 shades. It's like a crayon, 32 colors box. You've got so many. You can buy companies directly. But those 2 fundamental questions need to be answered always.
Thanks for this. And so we got a little sampling of what some of the Zeitgeist opinions are here in the panel. But we'd love to open it up and get some good questions for the audience. And if it's okay, let's have maybe 1 or 2 folks answer, not the whole panel, so that we can just get around and ask more questions. So you'd like to go first?
So combining 2 lines of thought. First one, with AI, hypothetically, you don't need to hire as many engineers, you don't need to have as many people working for a company, and therefore you don't need to raise as much money as traditionally you would. With venture capital not delivering returns already with the current model we have, and now companies not having to raise money externally, what is the future of venture capital in your opinion?
And by the way, what's your name?
I'm Kate and I run a venture capital firm, so I'd like to know. This question.
So the question is, what's the future of venture capital in all this? Yes, there are AI companies that are less capital intensive, and there's a bunch that are doing really well. Cursor, those folks have gotten 100 million in ARR. The question I have about some of those companies is, do they have a moat around their businesses, right? And so, you know, I mean, those are great revenue numbers, and you definitely want to get out at the right time. But I still think there's a role for venture capital in building companies, identifying companies. To have a moat, it takes money. I mean, it takes time and it takes effort. So certainly in the enterprise. If you're doing anything in AI in the enterprise, I think there's still a role for venture capital.
And you want?
Let her go and I'll go.
I love that question. I mostly invest in venture deals and fund. I want to talk about some new trend in AI startup and venture, and then answer the question of future of venture capital. So in this round of AI revolution, what I've observed are 2 new trends. One is the startup are lean as ever. So there is, if you haven't heard about a index, it's called Lean Startup Leaderboard. Google it. It's by Henry Shi, a serial entrepreneurs. Basically tracking 50 startups. Have 3 criteria to qualify on that leaderboard. One is ARR above 5 million, less than 50 people, less than 5 years old. 50 of them, most of them are in Silicon Valley, 25% in New York, 3% in Paris. So I want to ask some questions just to get a gauge of audience. What do you think? What do you think the revenue per employee? Let me start with the first question. What do you think? How many employees per company in these 50 companies that they track? There are unicorns in those companies.
5.
No. 10. Up. 19, somewhere around there. Next guess, what's the revenue per employee in those companies? They're less than 5 years old. No, not that much. Per employee.
5 million. 5.
1.2, not that much. There is one mid-journey in this billboard, which is a unicorn, which scared the number. If you add like that back, it's about like 20 million. So my conclusion is that it's so much easier to start a company, and out of those 50 companies, the average money that they need from VC is 32 million. After that, they're off the races. They don't need to raise anymore. So to your question, what does VC do then? The next trend that I observed is venture capital is becoming more like private equity. So there are now venture capital roll-up. For example, General Catalyst just gave 105 million to a company called Idea. They are a AI-enabled legal assistant. Basically, they use AI for regulatory documents. But the deal is very interesting. It's very atypical. So Udea received 30 million upfront as equity from General Catalyst. The other 75 million is for them to acquire similar companies. So because now our AI application is very, very specialized in certain vertical, and in those verticals, it's about the speed and how fast you can roll out. So I think that's maybe one thing. The other thing is, I don't think.
Okay, Ken and Ed, do you mind answering the next question so we get a
Oh, you don't want to
question
know
from the
this
audience?
question? Okay.
Yeah.
Okay.
Okay,
Okay.
how about this? Let's
No,
see the next question, then
Yeah, that's fine.
one more question from the audience, and then we get kicked out. So, who would like? Yes.
So, job reductions, right? As you mentioned, okay, 2/3 of the jobs are going to go away. I see pitchforks on the horizon, right? So, potentially we have a political issue, right? So the New York mayoral race has changed a lot, right? So what do you see as being the political situation going forward when you have a whole lot of jobless kids, right, who've been kicked out by AI because now you have only the top performers who are actually making any money?
So if we can have Ed and Ken answer this one.
Yeah, I think it's a valid point. We saw some of it back in 1998 with the 1%, 2% movement, the other 98%, whatever that movement was called, of mostly middle class people who, we did our job, we went to school and majored in art history, now we don't have jobs. That problem will continue. People picking, the wrong thing. That's why I said broaden your horizons. Don't major. If you want to major in art history, fine, but do something else and pay the bills at the end of the day. But the other question is, what about the 2/3 that are, whether they're screwing, dome lights in Fords at Dearborn or something like that. And I think we're seeing a lot of that now with the MAGA movement. People are just dissatisfied with the ability to provide for their families without being in the top 1/3, or and the perception is, the rich guys continue to roll up money and everyone else, the wealthiest income has gone up on a double, triple since 1990 or something like that. And the average guy in the street has seen it go 20, 30%, something like that. And the feeling is, go for the pitchforks. And I don't know how we solve that problem, but the future of work, as Jim talked about earlier, is how do you keep people productively employed, even if they don't make a lot of money at it, but they can still have a reasonable place to live, they can have food, their kids can get an education, and there's a future. They perceive that there's a future that's at least as bright as what they saw their parents have. And it's a tough question. I have no answers for that. So if I did, they'd make me president and I'd resign instantly.
Yeah, only because I've been around and have heard that concern forever. And so I somehow or another, we particularly here in the US have always found a way to sort of repurpose ourselves. So I am generally on the optimist side. I remember we said this with the internet. And frankly, the internet is so pervasive and creates so much opportunity. And I think AI, just like we talked about before, I think there will be new, robotics, for example. Robotics didn't really, people have been talking about robotics forever, the vacuum cleaners. And now I think you'll have a real industry in robotics. So I think the ingenuity of folks, the ingenuity of the US, and the system we have here, I think will create new opportunities that frankly, none of us in the room perhaps can envision. So I tend to be on the optimist side that we will create those jobs. Yes, there are always some jobs that go away. And I think we have to be careful. And like if you're a mayor of New York City, to help those folks that are going through a transition. So that's real. And we've done that ever since I have been around working. But I do think I think employment overall will go up. And I've seen this after every industry, every change in industry. I would say the last thing is, I came out to Silicon Valley back in the 70s. I grew up in the greater Boston area, and I felt this was the area of technology, even though everyone talked about 128 in Boston. And I would just say nothing has changed my mind. Then figure out where to locate and what industry to go into. And as I said before, go where the action is, and there'll continue to be action, and there'll continue to be jobs. And I just happen to be a glass half full individual.
It's great to end on an upbeat note, and but there are lots of interesting topics here. We've got all the answers. Let's please thank the panelists.
Prompt that you're 3 minutes early, actually. Did you know that?
We have 3 more minutes.
You give it back. Okay, thank you.
Let's stay on.
Yeah.
Yeah, you're out.
But here's the
Yeah.
most important thing: is don't leave. Remain part of this orchestra, because we're going to keep talking. And you can chime in when you see something that you have a point of view on. We're going to talk about where to invest around the world, and by asset class. It's going to pan out a little bit.
Not here.
Not here. Okay. So we have a perspective from Riyadh, a perspective from New York, from Utah. Where's Taylor? And I'm forgetting my fourth panelist. I'll look at my phone. You know who you are, Jack. Oh my God! Get up here, Jack. So every Tuesday, tomorrow, I just realized it's 11 a.m., but it's early for you guys. It's 8 a.m. We'll be at the airport doing this, the 271st